Okay, welcome everybody to Wall Street Reporter's next super stock live stream, February 15th, 2022. We're back with Relic Health Tech RQHTF over the counter and Dr. Lisa, the CEO of Relic. Welcome back.
Thank you. Thanks for having me back.
Absolutely. So for anybody that's new to our program, of course, our goal is to bring you those stocks which have that 10x to 100x upside potential. So these are companies that are going after massive multi-billion-dollar market opportunities. They're at a key inflection point in their growth, and there are multiple catalysts in place right now which can ignite that growth. Relic, of course, as we have seen over the last year, has those qualities. We've passed the inflection points, and now we're just waiting for the stock to start taking off. It feels like it's been a rough year for many stocks. It feels like the stock really wants to go. It's just been kind of maybe held back by the market, but still, I do want to add, Relic has actually outperformed the health tech space by a massive margin. I mean, if you look at Relic today, is near new highs. Whereas Teladoc, other stocks in that space, especially some of the Canadian microcaps, they're down, 70% off the highs. So
yeah, it's a brutal market out there right now. There's no question, but I think certainly Omicron and Delta, those waves didn't help healthcare any. But I think we're coming out the other end of that most recent wave, and I really don't think that we're going to hit any more waves that are anything like as dramatic as we move forward globally, recovering from the pandemic. So hopefully healthcare as a sector is going to bounce back.
Yeah, it really looks like just looking at like Teladoc, some of the others, things have really bottomed out because it was like a nuclear things are now the green shoots. I think we're starting to see the green shoots, but I think it's very important also. I think the takeaway is that the fact that Relic is basically kind of coming up. It's in an uptrend, really kind of. It's not at the bottom like the other guys are. It's so when the sector starts moving, the move in Relic I think could be much greater than the Teladocs and some of the other companies in that space. Of course, that's my opinion. But the point of today's live stream is not to talk about my opinion, but really to get your insights into what's happening with the Relic and what's ahead. So, and of course, we're going to open up for questions, and I highly encourage everybody watching, please ask your questions because your questions that make these events valuable. So, Lisa, big news today, which I really want to kind of I want you to provide some color, help people understand really the significance of this, because I think a lot of people didn't even quite understand it. But okay. On the surface, the headline was, okay, you're expanding, you're getting another 10,000 patients in respiratory,
musculoskeletal and respiratory conditions.
So you expand 10,000, which is very nice, right? I mean, it's millions of dollars in potential leverage.
Yeah.
But there's a lot more to the story, which is the recent expansion of the Medicare billing codes, which happened last month.
Yeah, so January 1st, 2022, Medicare introduced 5 new billing codes for remote therapeutic monitoring. And so that covers conditions that previously haven't been covered, including musculoskeletal issues like osteoarthritis and respiratory issues like asthma. But it also covers not just the traditional medical device collected data, but also patient self-reported data. So, for osteoarthritis patients, it tracks, pain, mobility, range of motion. For example, asthma patients, it tracks, are you waking up at night feeling short of breath and needing to take your inhaler. So these are key metrics for managing those particular chronic diseases that aren't covered by the way that the remote patient monitoring or RPM codes are set up. So these codes bring in another 20 million patients to our total addressable market. So, we have always talked about having 37 million chronic disease patients who have 2 or more chronic conditions conditions as our target patient population. But adding these musculoskeletal and respiratory patients expands that market by another 20 million patients, and not only expands, the patients, but also the ways that we can access those patients. So we can connect with those patients through family doctors or through specialists. So, orthopedic surgeons, rheumatologists, respirologists, or in the US, we call them pulmonologists. It gives us a lot of flexibility to access this particular patient population.
Okay, so bottom line is this new Medicare billing codes. Essentially, what it does is it opens up. You have 20 million more potential patients.
Yeah.
So your market originally was 37 million. Now it's another.
It's almost 60 million. Yeah.
So almost 60 million.
Mm-hmm.
Let's just say 57. I don't want people to say we're exaggerating. So,
yeah.
So 57 million. Okay. So 57 million potential population. I think it's also important for anybody new to understand that Relic is actually generating significant revenues. We're going to talk about that in a second. But okay, 57 million is essentially your market potential has just doubled literally overnight because of Medicare. So I think I'd like to really today, I want to kind of spend a little bit of time so people really understand how important the Medicare billing codes is. I know it sounds very esoteric and very boring. It's not exciting, but really it's the core of what pays the bills.
Yeah, it's exciting for me, but yes, maybe not for normal people. So.
Yeah, I mean, people want to hear about technology. They don't want to hear about Medicare. They don't even know. But I think a lot of people really don't understand it. Okay, because here's the thing: Relic has been around, a couple of years, right? And the early years of the company you were pioneering this remote, the health tech, remote patient monitoring space. You were really a pioneer in the space. And the challenge is it was almost like, you built it's almost like in the West, you built like a little, general store, but the railroads weren't there yet. So the Medicare, so you had a store, but you had no customers.
Yeah.
The Medicare essentially enables the reimbursement. It actually enables you to get paid. So, it makes the whole thing work.
Yeah. So when we started in 2018, there was a brand new billing code from Medicare, one single billing code for remote patient monitoring. And there's now there's 23 billing codes that clinicians can leverage by using our platform. And there needs to be a billing code in existence in order for Medicare to reimburse a clinician for delivering that service. So introduction of new billing codes means there's introduction of new payments. So that's really the most important, connection to make between codes and how clinicians and therefore we generate revenue. So every time these new billing codes are introduced, it increases the potential revenue for clinicians and therefore increases, our market, our potential customers. When we started in 2018, there was that one billing code. It was only worth about $59 per patient per month. Now with the new RTM codes, some of our clinicians are making well over $500 per patient per month. So, it's a huge difference, and it's really made the difference between, it being really a question of, us educating people and being the missionaries in the space and trying to convince people that, the improvements in health outcomes and patient care are worth it, and to, really creating a significant market pull for us where we're, getting a lot of our business through inbound sales, referrals from different customers who've heard about us through existing clients. And we're also attracting the attention of these larger clients like Datasoft Logic, who have much larger patient populations, because the financials, they just make a lot more sense now. There's a lot more money to be made. And so, even if you're wary of trying virtual care with your patients, this is something that helps you to overcome that wariness. So, I think the other thing that I'd like to really stress about these billing codes is, this is a huge change, a huge progression for Medicare and Medicaid. So the chronic disease billing codes that, we've traditionally leveraged, the idea there is that, we work with these chronic disease patients in the home, we help manage their conditions, and as a result, they're hospitalized less frequently. And the hospitalizations are really what drive healthcare costs. In the case of these musculoskeletal and respiratory issue patients, they're probably not looking at significant ICU stays if they go to the hospital. So what Medicare is really trying to prevent for them is those ER visits or complications that require, a different specialist to weigh in, or maybe a procedure of some kind. But overall, if you look at the cost for a chronic disease patient with all the hospitalizations, the cost of the system is much higher than with these other patients. And yet, Medicare and Medicaid have invested in proactive preventative care and treatment and management for these musculoskeletal and respiratory patients. So even though the potential savings is lower, it's still significant enough that it's worth it for them to invest a significant budget into these other clinical conditions. So, I think it really speaks to the trend with Medicare and Medicaid, where they're very much focused on proactive preventative care, and not just to prevent these really traumatic stays in the intensive care unit, but to really just keep these manageable chronic conditions under control, which you can't do if you leave the patients, to manage them on their own in the home. So I think it really signals a shift away from, you have to justify that if Medicare puts in $1 million, they're going to save, 18 million, which is the math around chronic diseases, to, these other maybe less dramatic interventions are still going to represent significant cost savings. And so, it really signals to the market that these billing codes are going to continue to expand, that more programs are going to be introduced for other clinical conditions, and it just means that this market's going to continue to grow very significantly for the foreseeable future.
Okay, so I think it's really important to kind of, I think, for people to understand, like, really what's going to turbocharge the growth, like what's really going to turbocharge the business of Relic. Like, what's going to make this thing explode is you got to have the conditions, the business conditions that make these things happen. I mean, look, I know, look, you're in the business of healthcare, and we're to make, it's basically to help people. But at the end of the day, there has to be a financial incentive to make the whole thing work. Right? That's just the human nature, right? So, and this has been solved, which is extremely important. So first of all, you have Medicare, which pays for everything. But really, you mentioned, okay, so the big thing that's happening is this remote patient monitoring. We've seen there you have empirical evidence, you have case studies which show that, and Medicare obviously understands this, is that by investing $50 a month or whatever it is, $100 a month in this remote patient monitoring, let's call it $1,000, $1,500 a year, they're saving potentially, you've talked about the math, like, 50,000, whatever it is, could be a couple $100,000 in emergency room visits. So, everybody needs to, the big trend is getting healthcare costs under control. Your technology basically does that, which is why Medicare is willing to basically pay for it. But at the same time, it's also important for people to understand is this, you mentioned this pull forward dynamic. So in the beginning, like, you had to really explain this to doctors and healthcare providers, like, the benefits for them to get in, why they should offer it to their patients. And you had to be, like a missionary explaining this. Now they're coming to you in droves because they're making money. Some of these guys are making, we're talking about 7 figures a year, $1 million plus a year in extra income recurring. It's a SaaS. This is a SaaS business. It's a subscription business. So, because, and this helps their patients obviously, but also, hey, they're motivated. So this is like, I love a business model which is like a no-brainer to implement, that anybody understands. You don't have to really sell. You don't have to sell it hard to people for them to buy. Everybody gets it right away. It helps everybody. It's like a win-win-win situation. And this is the year that is. Well, last year was the real inflection point, but this year, 2022. Lisa, what is the theme for 2022 for Relic? Let's get this.
Yeah, I really think that, we're actually currently at an inflection point. I mean, certainly last year we did start to see growth in the second half of the year after the vaccine rollout and, the pandemic became less of a significant obstacle for us. Certainly I think everyone in healthcare experienced some bumps in the road from Delta and Omicron in the last quarter of the year, and to some extent the first few months of this year. But, I think that's really behind us, and so that shouldn't be any kind of barrier to growth going forward. But I think the real step change for us is around the size of clients that we're now negotiating with. So you saw the contract with Datasoft Logic that ultimately will add 500,000 patients or 360 million a year in recurring revenue to our platform at full deployment. I think part of why we got that contract across the finish line was
$360 million.
Yeah, so it's
revenue.
50,000 patients a year that we're planning to add through Datasoft Logic. They have 500,000 patients. Hopefully we'll be able, in later years to accelerate the rate of onboarding with them. But ultimately, adding 500,000 patients to the platform translates to 360 million a year in new revenue or recurring revenue. And I think, part of getting them across the finish line was signing our partnership with Cognizant. I think,
yeah.
Even though Datasoft Logic, it's a network of home health agencies, and the home health agencies will do their own care management. So Cognizant's not going to step in there to provide care management services. But having a multi-billion-dollar Fortune 500, Fortune 200 company who's very well known in healthcare, particularly in the IT services space, certainly not a household name for most of us, but in healthcare, very well known, very well respected global company, having their kind of good housekeeping seal of approval has helped a lot with our credibility with the larger clients. So, I think that's where you're going to see, the significant increase in the rate of growth by the end of this year, is because we'll be graduating to these much larger clients, and we'll be able to add patients at a faster rate. So larger numbers of patients coming on board more quickly, and that's where I think you really see a change in the business.
Okay, so basically, so it's like all the tailwinds, everything is really set up. I mean, this is why I think there's the catalysts, everything is in place now. You have the Medicare situation that's just massively expanded your market. You have you have this new partnership, Datasoft Logic. Most importantly, you have Cognizant. There was always a question. Okay, can Reliq can they onboard patients at scale? Can they onboard at scale? That was the big question overhanging, I think, the stock. And Cognizant, essentially, that's what they do. They take, so that issue is off the table, and you're able, right, like literally, correct me if I'm wrong, but if somebody says, hey, we got 100,000 patients we want to onboard by April, can you do it?
Yeah, that's not a problem at all. I mean, frankly, that wouldn't have been a problem for us even in the absence of Cognizant. With care managers, they are human resources. So it is, there's some time component associated with getting them up and running and trained and hired in the first place. But I will say that we've had, significant response anytime we posted, jobs for care managers. So, I think we would have been able to satisfy demand, but this just means, it's an on-off switch. We tell Cognizant that we've got a client who wants to ramp up very quickly, and they can bring their care managers to the table instantly. There's no, delays. So I think that means a lot to the bigger customers. And I think just being aligned with, a very well-known, well-respected, multi-billion-dollar multinational, and gives us significant credibility in the space that, hard to come by as a small, relatively new venture, particularly coming out of Canada. So I think that's going to be, we'll look back on that agreement, retrospectively and say that was really a big turning point for the company.
Okay, Lisa, I'm going to ask two last questions, and we're going to open up for audience Q&A. We got a bunch of questions coming in. So, okay, so bottom line, what run rate are you at right now as we stand today?
That's a good question that I don't actually, we don't sort of do the run rates on a sort of weekly basis. We did end.
Okay, not week. I mean, not as of February. I mean, like not as of this morning, but like. Ballpark, like, are we?
I mean, we're certainly over that 2 million a month run rate at which we ended 2021.
Okay.
So that was where we were at the end of December. Of course, I'll reiterate, as I have before, that, run rate doesn't mean that we can recognize the revenue instantly. There's, a month or two delay, depending on how quickly those patients, get their acts together with collecting their vitals. And, I certainly think that, one thing that's going to really help us going forward, with being able to, state run rates on a very regular basis with, a high degree of confidence, and, people understanding what that will translate to in revenue is, getting out of this pandemic. Because certainly, when you have Omicron and Delta, some of the patients we have on the platform, might be too sick to collect their vitals for 1 month. But, this is part of why I've always said, the most important metric for us is to look at that run rate, because even if, 1 month, the revenue isn't what you would expect for that particular patient population, those numbers, because, people were sick with a global pandemic and couldn't collect their vitals, it doesn't matter really, because over the long term, we have this captive patient population that translates to this amount of revenue. So, we really have focused on building a business that will continue to generate significant new value, incremental value going forward. So this is a business that will just continue to increase in value going forward. I'm repeating myself a little bit, but I think that's the most important thing to look at is, you look at the revenue run rate and what that means in terms of the number of users we have on the system. And that number continues to go up. Even if there are bumps in the road, like we had at the beginning of 2021, the first half of the year with, a massive global pandemic, and before the vaccine even rolled out, even if something else happens, a very rough flu season at some point, these are transient little bumps in the road. But overall, we have this very large captive patient population that's growing very steadily, and that's going to translate to these very significant revenues in the long term, and frankly, relatively short term as well.
Yeah, no, I think the market is forward looking, right? I'm speaking purely from the market standpoint, not the business, but the market's forward looking. So and the stock is going to get valued off that run rate. So, I think the stock still has to catch up, because again, we've seen crazy multiples in the health tech space. Based on, essentially, let's call it a 25, 30 million a year run rate. Mm-hmm. And I think you said that you would exit 2022 with, you mentioned like revenues, right? I think you said.
Yeah, we forecasted 40 million in revenues.
40 million.
Mm-hmm.
Okay, so 40 million in revenues. And again, the market, we've seen, I think the Livongo deal was like 50x? Some crazy
40 something, I think.
Whatever. Yeah. So, so basically that would value, if you had the same multiple on your revenues as Livongo, and again, we've talked about before, like you have it's a much higher quality revenues that you have. It's a much more quality business model. So potentially the stock, the company would have a valuation of, approaching, $2 billion. That's like, how much is that? Is that $10 a share? I think it's $10. Am I right? How many shares are outstanding?
Yeah, that's about right. Yeah, that's about right.
Yeah, so $10 a share. Yeah. So the upside really is like $10.
Yeah.
If you do the 40 million revenues. Okay, and I think so. What the market really needs to know is to gain the degree of certainty that this is a done deal. The 40 million is going to happen. I think if the market knew that this 40 million is a done deal, fait accompli, the stock would be $6 by 3 o'clock today. So we have to basically take off the table any potential ideas that potential risks, all those things.
I think investors, the pandemic makes people justifiably nervous, and this was a really intense wave that we most recently experienced with Omicron, because it was so infectious. And so, I personally, and many people that I know, had gone to this point without really knowing anyone personally who'd caught COVID. But in Omicron, my oldest daughter had it and was not only quite sick before Christmas, but is still quite sick with it. And I know tons of people who have it. I'll talk to analysts and they're just recovering from it. It's been sort of more in our face this last wave. So I think that makes healthcare markets nervous, and it certainly does impact on healthcare businesses, but it's temporary. And fortunately, numbers are already starting to come down. And I really think, based on what everyone's saying, if we're still looking at a potential, rise in numbers next fall, there'll be a vaccine, by this fall that's more protective against different variants. So I think this is kind of the worst of the pandemic is behind us now. And I think that's going to be a real tailwind for healthcare businesses, is not having to deal with some of the unpredictability that came in the pandemic. I mean, none of us were really expecting Omicron to be what it turned out to be. That was, much more significant than anyone had expected, for our winter COVID wave.
So I saw things for 22. I mean, like everything is kind of lined up. You have the Medicare, you have Cognizant in terms of onboarding, you have contracts. Things are there's a strong probability, let's just say, of that 40 million happening. Okay, let's see if we can get to some audience questions. Okay. I've talked too much, so let's see here. Okay, Samantha's asking, congrats on the new contracts. Does the industry have a 1-year roll date for which they will access and post savings efficiencies and essentially talk up preventative care side?
I'm not sure what you mean by the 1-year roll date for, access and post savings, but what I will say, hopefully is the right interpretation, is Medicare and Medicaid sort of looking at cost savings when they roll out a new billing code over a 1-year time frame. Yes, but they're actually looking at it, more granularly than that. So the way that Medicare has been setting up reimbursement models with physician practices over the last 5 to 10 years with accountable care organizations and shared savings models, they're gathering data on monthly, quarterly, and annual bases, looking at how is this ACO performing in terms of reducing hospitalizations and complications, and therefore generating savings for Medicare system and Medicaid. So there's a lot of data that's already being collected by Medicare and Medicaid, so they do monitor when they roll out these programs, how successful are they. But generally, they've done some pilot studies before they roll out a billing code that have validated for them that, yes, this is something that'll be really effective, and it will also obviously save significant money.
Okay, yes, I guess you answered her question. Toby's asking, will you break down SaaS device sales?
Yes, and I'll be very transparent with you that the only reason we didn't have a breakdown of device, hardware versus software sales in the last quarterly financials is we had a brand new CFO. And when we got down to, the day we had to file, that was when, through the chaos of transitioning like that, I realized that we hadn't broken it down, and we just didn't have time to go back and, make sure that we had those numbers accurate. So we left it in one thing, but we'll be breaking that down going forward. I mean, certainly I think everyone knows that through the pandemic, through the end of June, 2021, virtually all of our revenue came from hardware. And so there was still hardware revenue, in the second half of last year. And there'll still always be some hardware revenue going forward. The difference is, and it's a very important difference, is, right up until the second half of last year, when we sold hardware, it was generally a one-time thing to clients who might not ever use the platform. So we were basically just reselling hardware because we had it in inventory and we could monetize it. At this point, when we sell hardware, it's tied to a software subscription. It creates a little bit of confusion, when you're just looking at how those numbers break down, because the auditors have us putting any software revenue that comes as part of a package with hardware into hardware. So the hardware number is a bit inflated, and some of what is allocated as hardware revenue really should be in software. So we're, going to see what we can do with the auditors around how else we can break that out. But I think, the bottom line is when you see hardware revenue, do keep in mind that's always tied now to a software subscription. So previously when we sold hardware, it was a one-time purchase and, it wasn't generating recurring revenue for us. Now, anytime there's a hardware sale, there's a software subscription tied to that. So it always, is an indicator of, future recurring revenue from software. So it's a huge difference in the way to look at the revenue. And, it's not one-time hardware sales. It's that hardware sale represents a subscription for a particular patient to the software, which is recurring revenue.
Okay, let's see if we can get a few more questions. We're a little tight on time here.
Yes, no, I'll talk about shorter.
Okay.
Be more
okay,
the larger contracts, I mean, we've announced.
This is the big one. This is the thing that everybody's waiting for like these mega contracts that are the game changers.
Yeah, I mean, I think the Datasoft Logic one is definitely in that category. It's definitely a game changer for us. I think Omicron and Delta to some extent before it definitely affect some of the larger clients more than the smaller clients. So, they're more likely to experience minor delays related to those exacerbations of the pandemic. But, I think, as I said, we're coming out of that. So, it's not an if for sure. It's definitely a when. And I think, without question, by the end of this year, you will have seen some significant announcements, but, you shouldn't have long to wait. Yeah.
Okay. This is
Profit margins. So our gross profit margins are 75%, and our EBITDA margins will be 45% this year.
Okay, so these are huge numbers. These are huge SaaS
numbers.
It's
a fairly classic SaaS model. I mean, there's some hardware components where clients might specifically want to purchase hardware through us, but so multiples of earning or EBITDA. So actually, if you look at our slide deck on our website, typical multiples in the space are 5 to 30 times revenue, and that's usually forward looking, so based on forecasted revenues. The multiples tend to be on the higher end, so 30 times or more when
revenues. 30 times revenues.
Yeah, when the company is profitable and if it has good EBITDA margins. So a lot of the companies that we're all familiar with, like Teladoc and Livongo, have single-digit EBITDA margins, whereas ours are very compelling double-digit EBITDA margins. So, I think my expectation is that we certainly should justify those much higher multiples. Obviously, I have no control over the market and how it behaves, but that's certainly how I'd be looking at it if we were a private company. Those would be my expectations that I would be conveying to the board if we were a private company looking to be acquired.
Okay, yeah. So this is essentially I think the story here for investors is basically we got to wait. This is the year where things are going to happen in terms of, okay, company does 40 million revenues 2022. The market, the health tech market is, it's coming back. So, potentially you can get 30x on that, 40 million revenues or more, or 50. I mean, because we've seen that. It's not, these things are not crazy.
Yeah.
So, there's a clear path for the stock to be 5x, 10x from here.
I mean, I think, we all know, we all know the more rapid your growth rate, the higher a multiple you tend to.
Okay, let's few questions.
The one before this that flashed up.
Oh, yeah. You want to do? Let's do one at a time. Because I keep popping them up.
Yeah. So I just wasn't sure if they were in order. So in terms of announcing the number of patients, I think I've talked about this before. So we have to be a bit circumspect about announcing patient numbers because it's absolutely non-linear. So we talk about the revenue run rates that we hit at the end of a quarter, but you have to keep in mind, for example, this last year, I said at the end of June, the bulk of the new patients were onboarded in the last 2 weeks of June because of the way the pandemic, was sort of subsiding. So, but there'll always be seasonality. So, August might be slow, maybe even July because of vacations. December might be slow, or November in the States where you take your U.S. Thanksgiving very, very seriously. So, it doesn't make a lot of sense to announce numbers on a monthly basis. Right now, we provide the revenue run rate on a quarterly basis, which does, point to the number of patients. The math there is pretty basic. But what we really want people to do, because my concern is I get a lot of people who tell me they're modeling our forecasts based on, patient numbers that they've kind of gleaned from different presentations. But, as I've said before, as a PhD chemical engineer, you're never going to have a good model if you don't have good inputs. And you're not going to have good inputs to model any company's revenue projections really, unless you're within the company, because there's so many different factors at play that, you can't disclose on a day-to-day basis to the market. It would, give your competitors information about your business you don't want them to have, and it would create volatility in the market. So, we report quarterly, and I think the most important thing to focus on is our revenue projections. We're the ones who really understand our model and the way that our business works. So okay, somebody's already asking me something about the next quarter. So we're forward guiding right now on an annual basis. So our guidance is for 2022 annually. I think one thing most healthcare businesses have learned over the last little while is, there's been some volatility and unpredictability with the pandemic. So, and I also think in healthcare, it tends to make a lot more sense to sort of focus on a slightly longer time horizon. So right now we're providing guidance on an annual basis, not quarterly.
Okay.
I missed a bunch of things.
Okay, so two more questions. That's it. Okay. So Dennis asks, okay, so revenue picture a bit murky with the lag. Can you give a clear SaaS cash number? Only SaaS.
Yeah, I think when we release the financials for, January and December aren't coming out until May. Whenever that quarter, the quarter ending March 31st comes out, I think it's May. We'll be able to release information on that. We don't, as most companies do not, we don't release information prior to the quarterlies because they have to go through the review with our financial team. But in terms of revenues for the quarter that we're about to report, obviously I'm not going to say anything specific about the revenue since we haven't reported, but again, it's a little bit complicated because of the way the auditors have us reporting hardware revenue. But I think, again, that's why I say it is a little confusing if you just look at, here's some hardware, here's some software. The most important thing to remember is that any hardware purchase through us now is related to a software purchase as well. Sometimes the software purchase is rolled into the hardware line item because of the way the auditors treat the hardware purchase, but there's no, going back, hardware purchases were one-offs. Now hardware purchases are always associated with a subscription that's going to generate recurring revenue through the software. So, I think in, the last 6 months of last year, probably hardware was a good chunk of our revenue. If you look at it going forward, we will expect that over time, hardware will be less than 20% of our revenues, but always tied to a subscription. So we're able to get much higher margins on hardware that way. Hardware is absolutely not at the core of our business. It's not the point of our business. It's something we do when clients insist on buying the hardware through us, but always tied to that subscription. So, for the moment, I wouldn't get too hung up on trying to figure out exactly what's hardware, exactly what's software, because again, that's all looking backwards, and that's not going to tell you much about where we're going forward. So the key is, to focus on that revenue run rate that we're talking about, because that's where the real value is going forward, and that's the metric that the analysts and other potential partners and clients are looking at. How fast we're growing and how large that patient base is.
Okay. All right, Lisa. Let's wrap up.
Okay.
What news flow can investors look forward to? The next let's call it 4 to 6 weeks. What's because we have some people. We have somebody mentioned that they panic sold yesterday.
Oh.
And so what's coming up in the next 4 to 6 weeks that people could look forward to so that they don't sell in a panic if the market crashes? Like yesterday, the market was down substantially.
Yeah, yesterday everyone was worried about the Ukraine and Russia, so completely understandable. I think it's really important, mind you, this is completely my personal opinion, but to decide what your investment strategy is. So are you, a day trader? Are you in it for the long run? And then you sort of set your risk tolerances accordingly. Obviously, I know you ask me this question every time, and I think every time I tell you I can't, provide forward-looking statements. We can't sort of pre-announce news that's coming because that's, not really welcomed by the regulators.
Right.
But there's no question our business is growing, and we're continuing to add new clients all the time. And so I think there'll be, lots of good news going forward. I think it's also really important, I think we communicate with the market quite frequently, so you don't have to worry about going 4 to 6 weeks with no news. But I think it's also really important in healthcare to make sure that, you're looking ahead, and, you have your eyes on the horizon, whether your horizon is a year or a couple of years. It should be more than just, a day, a week, a few months, just because of the nature of this market. The value might take a little while to sort of show up on, your income statement, but if you have a captive patient base, you've got a very solid business going forward.
Excellent. Okay, so the big picture is we're expecting 40 million revenues this year. Company's doing 2 million run rate right now. So everything is kind of like progressing towards that goal. You know, it's on the path to get there. So essentially, people, anybody watching, they just got to be patient and watch the news flow for updates on progress reports. Very simple. Lisa, on that note, I want to thank you, and we look forward to hearing more from Relic in the coming weeks.
Great. Thanks very much for having me. Take care, everyone.
Thank you again. Okay, let's get ready for our next exciting presenter, NuRAN. Hang on, let me just set this up. Stand by. Okay. Francis.
Good afternoon.
Good afternoon. Can you hear me okay?
I do. You?
Yeah, fantastic. Let me just get everything, make sure we have everything set up here. Okay. I'd like to, Frank, can you get the monitor close so we're at the same size? I think I just realized you're like
here?
Yeah. So we're at the same, yeah.
Hold on. I'll do something for you.
Okay. There we go.
I'll crank it up.
And we're gonna have the high production values here that
I'll get closer.
Okay, here we go. Okay, let me just
Good.
pull up this and okay, let me just we're gonna do a quick intro and we'll begin. Okay.
Yes.
Okay. Welcome everybody to Wall Street Reporter's next Super Stock live stream, February 15th. We are back with NuRAN Wireless, NRRWF over the counter, NUR on the CSC. Francis Letourneau, the CEO. Francis, welcome back.
Thank you. Hello, everyone.
So, Francis, for anybody that's brand new to our program, our goal with Wall Street Reporter's next super stock is to bring you those stocks which have that 10x to 100x upside potential. So these are all companies which have three things in common. They're going after massive multi-billion-dollar market opportunities. They're at a key inflection point right now, and there are multiple catalysts in place which can ignite that increase in shareholder value. And we've had already 9 stocks in the last 18 months that have increased between 1,100% and 5,000%, so 10x to 50x. And we're going to find out if NuRAN is going to join that great pantheon of 10-bagger stocks. So please, guys, ask your questions and then decide for yourself if NuRAN is going to be that next 10x. So with that said, Francis, congratulations on the recent news. You get things looks like they're really starting to take off with the wireless deployments in Africa.
Yes. So we launched a news yesterday that was not only to show progress, but also to establish the bar to where we stand today in terms of bill of quantity or inventory in country in order to continue to build of those sites. Everything is in country or in custom clearance as we speak to build 120 telecom sites per country in Cameroon and DRC. For your audience, a site for us is the tower, the power system, the radio system. So everything that makes those beautiful telephones connect to the rest of the world. So this is the motto of NuRAN, connecting Africa and the emerging markets.
So what we should do is, for anybody that's new to the story, we always have new people watching. Can you just give a snapshot of the market opportunity that you're going after? What is NuRAN all about? Let's talk a little bit about Africa, why this is such an exciting opportunity.
It is a massive opportunity. I was running some numbers recently just to give you an example. Sub-Saharan Africa and Latin America, there's close to 800 million people living in rural areas. And I would say some are connected, some not. If we take just the assumption that 50% needs connectivity, because when you look at the global world, I would say, opportunity, there's 1 billion people that still do not have mobile connectivity. So having in their village, in their houses, a connection to the rest of the network. So there's 1 billion of those still not connected in those two continents. So you have 800,000 people, million people living in rural areas. Take 50% of them who needs connectivity, and then divide them by, on average, 5,000 people per village. And then the base of our business model is driving $2,000 of revenue per site per month. So it's an opportunity of yearly revenue, globally speaking, just in those two continents, of close to 2 billion in revenue potential for players like us in this industry.
Okay.
So it's amazing. It's close to 80,000 towers that will need to be built to cover those areas.
Okay, so so it's a massive opportunity. You know, Africa, of course, is, you know, there's very few pure plays, you know, in terms of the stock market. Like, you know, in Africa, it's massive growing market. Everybody wants to get in there. The important part is this: you have contracts in place right now. So basically, it's not like, you know, we need to be very clear that this is not like some, you know, startup thing where, you know, somebody has a concept and they're going to go out and, you know, they're going to try. And no, you actually have contracts in place with a blue chip, you know, telecom company, which is Orange of France, which is like, you know, the US version of, you know, AT&T, Verizon, you know, T-Mobile, what have you. You have existing contracts, and this is for right now, potentially, it's potentially 10,000 towers,
So
or it's 25?
the 10,000 site,
10,000
site,
sites.
Jack, is the objective of the company, but currently under contract, committed, close to 2,500 sites.
Okay, I think, okay, so I think the number is 2492. Again, I don't want people to use this of exaggeration. So it's 2492. Each of these sites is expected to generate about $2,000 per month for NuRAN. Okay, so this is a contract. They give you this contract, but is that a minimum? I think that's actually a minimum, right?
Now, this is on average the calculation we're getting from the current usage and in a prospective mode. So bottom line, our financial model accounts for a 25% penetration rate. It's a user connected to your network. So it's the volume of people divided by the population. And we are currently just in Cameroon achieving 45%. So it's way higher than what we expected.
You're getting basically double what was expected.
We don't at this stage, yes. Plus, there's another factor which is called the ARPU. ARPU is average revenue per user. Okay, right now the ARPU is not at the level that we would expect. Just in Cameroon, for example, our average ARPU, that, by the way, we did not invent it. We have received the information coming from Orange itself, and the average ARPU for Cameroon is $2.67. So we are at $1 now. So 45% penetration rate and $2.67 ARPU would probably crank up the average revenue per site up to $4,000, something like this. But on average, our financial model accounts for something on average around $2,000 per site per month.
Okay.
So if you do rough math, right now, if we aim to do the 10,000 site, we will be a $250 million company. And because of the fact that we don't need this large overhead like the mobile network operator have, we will be generating 50% EBITDA, so $125 million. And the cool thing, and by the way, that's Canadian dollar, but you can reverse the math. But we're looking for a potential valuation based on peers or comparable. And comparable are the towercos, and towercos trade between 8 and 29 times EBITDA yearly. So we do not think that we will be at 29, but if we just take the bare minimum, which is 8 times 125, so we're close to $1 billion valuation once everything has been delivered. But of course, we're on this run rate. It's going well. We continue to execute. We're building the financing to support those builds because it's massively demanding in terms of cash, in terms of capital expenditure to build those infrastructure. So we're in the middle of those activities now with the different banks and development banks around the world.
Okay, so it's very interesting. So really, once you have these 10,000 towers up,
yes,
that's potentially the company's worth $1 billion. Now, how many shares outstanding do you have currently?
32 million shares outstanding, trading at $1.30 something cents today.
Okay.
So if you make the same math, we have a market cap of 44 million, I think.
Yes, I'm assuming that the share price, the share count is going to double next few years. So let's say you get to 50 million shares at $1 billion valuation. That's $20 a share is the upside. That's
yes.
The upside.
And the cool thing about this, Jack, is that we're trying to prevent dilution as much as possible. We have created a financial structure that allows us to raise capital at the private level. So we are creating a NuRAN Africa holding company that will be bringing all the cash necessary to build those infrastructure. 75% plus will be coming from debt from different organizations like development financial institution, DFIs or IFIs, and we will bring equity at this level. And the cool thing about bringing equity at the private level, it's less dilution. And because of the valuation, you give a smaller stake of the company for larger checks. So that's the reason why we've built it that way.
Okay. So, but again, it's very okay. So the upside essentially is $20 a share once you get these 10,000 towers. And again, that's not the end of the NuRAN store, because that's the 10,000 is just the near term target that you have. Potentially, you talk about some big, but this I think this is enough for now. And I think you can get there. You said by the next 3 years, 4 years.
No, it's fine. It's a 5-year plan. By 2026, we should be around 10,000 site. But bottom line, this is an objective that we've given ourselves. But just look at the scope of what it needs to cover the rest of sub-Saharan Africa and Latin America. There's 80,000 towers. So it will mean that we get 15, 17% of the total scope. Let's say we do 30%. So we would then be close to 25,000 tower, right? So we don't know yet. We've set an objective of 10,000, but of course, once the trend has started, the demand will be there, and there will be more and more of those opportunities kicking in. Now we're talking to MTN, Vodafone, Orange, Airtel, the big four in Africa, but soon in Latin America will be América Móvil, Telefonica, even AT&T that is currently operating in Mexico. So a lot of massive player to cover the rural area for them.
Okay, so essentially, it's very similar. Okay, so the NuRAN story is very similar to the previous guest we had on, which was also they were going after massive opportunity. They have contracts in place. They already have. It's like a SaaS. They have a SaaS model in the health tech space. You have a NAS, network as a service, right? Network as a service model in the wireless and telecom space. Very similar. And again, so people are asking, why is that stock? I mean, both of these companies, you're based on the contracts you have, it's just a question of, so the people, I guess I think most people are asking, okay, so why is the stock only $1.30 and not, $10 right now? I guess because people are not 100% certain that you're going to get there. So what we have to do is essentially remove that uncertainty from the market by explaining that that there is a very clear path to get there, and you're progressing on that path. So based on which is again this to the point is your news in the 3 markets that you're in now, which is with the Cameroon, the Republic of was it the official name is Democratic Republic of Congo,
Of the
DRC.
Congo.
And then you got North Sudan. So you have a lot of how many countries? There's 80 countries in Africa. I think there's like 80 countries.
I know. I think it's 56 if I recall.
56. There's a lot of countries. Yeah. So vast population. I think it's like 1 billion population. Huge opportunity. So you have this contract. So right now, the goal is to get to just with Orange is the 2,500 towers, we'll call it, the next few years. How many towers do you have right now?
Right now I will tell you right away, it's 57 as NAS, but we also have 7 more that we are operating in Ghana for Vodafone. But those were financed by GSMA in a program called Innovation Fund, where NuRAN got awarded for this. So we're still operating this network, hopefully extending a bit on Ghana with Vodafone, getting more of those sites live under network as a service. I'm in discussion with the team at Vodafone already.
Okay, so essentially, we're kind of in the early stage of going towards the full contract. So it's just a question of time, and we're going to be. I think the main thing here is that I think investors want to see that steady flow of updates on deployments. Like, okay, we got 100 towers this week, whatever the numbers are. But once they start seeing that, then this 2,500 towers, which is right now so the contract with Orange is $5 million per month. So let's call it 60 million. So that alone is worth, what is it, like 600 million? Based on the market comps.
Yes.
So that's still, it's $20 a share.
If you tell me. So let's see if the market follows you there.
Yeah, based on the share count today. So
exactly.
All right, so let's get to some audience questions here. Samantha's asking, Francis, congrats. Can you touch on the time frame for which you will be able to keep the assets? In other words, when you put up the towers, because you talked about kind of the model, how that works, what the numbers look like.
Yes. So those are really good points in those questions. First of all, part of the contract that we have in place with both Orange and MTN for the 3 countries, we have a transfer of asset planned in the course of the contract. So it's 10 years contract, and where we share revenue coming from the end user, and we bill a monthly guaranteed minimum monthly that covers our OPEX, our capital repayment, as well as interest. And this is in view to transfer the asset. This is the only bankable contract of such companies out there on the market. That's the reason for transferring the asset. For Cameroon, we're transferring assets after 6 years, DRC 5, and South Sudan will be 7, 8. This is how the contract is built. Will it be like this for all the contracts we do? Maybe not, because more and more people are asking us to extend our contract period. Plus, they would like us to keep the asset, especially the equity player. Because if you keep the asset, then it's more value, and so forth. Because you also need to predict what's next, what's after the 10 years. So there are debates and discussion as we speak on that front. But in order to be able to debt finance those contracts ahead of time without massive numbers to announce, like I don't know, 200, 300, 400 site live, generating X amount of revenue sustained. So until you reach that stage, you need to have more less risky type contract for the banks. So hence the reason why we've built it that way.
Okay. And so basically the technology in 10 years probably going to be obsolete, right? I mean, I'm sure it's going to be obsolete in 10 years.
Yeah, but there are mechanisms in the contract to move to 3G, potentially 4G. I doubt that you will see 5G in those regions, but of course there are G's evolution planned already in the contract. So just to give you an example, for Orange Cameroon, we're already planning pilots this summer with them for a couple of sites to run on 3G and 4G. And some will be running on satellite, some will be running on terrestrial backhauling. Backhauling is the connection between the site, the tower of the site, and the rest of the network. So we're already planning trials of 3G and 4G this summer with Cameroon, and probably the next wave will maybe see half of its site being populated with 3G on top of the tower. And that's it. That is easy because we just launched our 2G, 3G, 4G box that allow us to switch remotely from 2G to 3G to 4G, which is fantastically cool because you don't need to go back to the site. It reduces the cost. It increases the reliability. So we're pretty pleased with what's coming. So that's why we're ready now. And that's another reason why we are extremely big on Latin America as we speak, because 2G is not as powerfully used as in Africa. Because the 3G is the definite 3G and 4G are definitely enforced in Latin America. 2G is less than basic service in Latin America compared to Africa. Africa has this challenge, those challenges, battery, so energy, access, the money available to spend on telephony, and so forth. So that's why 2G is still on top of the list for sub-Saharan Africa, whereas Latin America will be slightly different.
Okay. I think also, I think maybe in the back of some people's heads, they'll think, okay, if these guys, have to, give back the tower in 10 years or whatever it is, like, what is, what's the value here and whatever. But look, the reality of it is that even if, now you may not have to give it back because ultimately they want that network as a service. Like Orange or these companies, they don't want to operate these towers. They're not in that business, right? So
they want to leverage the asset, Jack,
right,
but they don't want to manage them. So
right,
of course we have a way to flip the asset back to the operator, but we will continue the management of this. And by the way, building that expertise and knowledge in country will also allow you to sell high and to the left.
This is okay.
Right?
This is so this is the key thing. So people need to understand, like, in any type of really high growth business, the real value is, sure, you have the asset right now, but really it's the intellectual capital, the brand, everything else, which is the company's core competency. Is that you're going to be. This is 10 years from now. I mean, you're going to be constantly expanding, putting out new locations, building out the company's NuRAN's reputation, growing. I mean, you might get into whole. I mean, 5 years from now, the company might look completely different than it is today. It's like any tech company, there's a massive evolution. What matters is the DNA of the company, which is the core competency, the expertise, the intellectual capital. That's the real value. And of course, so I wouldn't be worried what happens 10 years from now, because you're going to see, I think in 3 years, and Francis, correct me if I'm wrong, but let's say 2-3 years from now, you're constantly going to be adding, new markets, new towers. So it's a rolling type of thing. So, in 9 years, you may have 20,000 sites which have that, so it's going to be constantly, it's a rolling type of thing. And, it's
additional service, Jack, it's already on the table. But I said, let's concentrate on what we're doing now. Once we are grown up and we have more expertise behind us, then we will aim after something. But Orange Cameroon is already asking us to do more. Can you manage those sites? Can you take this? So no, guys. So we'll go straight there. We'll get our expertise rock solid, and then we can expand. Just the managed service of satellite. We can serve other customers as well because we will have the infrastructure in place. So yes, there will be a lot of new services that will come. part of our current business model. There's nothing accounted for this as we speak, but in the upcoming months where we will be driving our strategic positioning for the next couple of years, we will soon get more demand on this thing. And FYI, the South Sudanese contract take that into account already. They gave us 58 towers that was destroyed, so they said it's ours, but can you take over, put your technology in there and manage it in a fixed OPEX mode? So we're already being asked those questions. So yes, the revenue from the revenue share type structure, $2,000 plus on a monthly basis, though this is the basics of our business, but this is going to go really high once we reach a good level of expertise, and we are recognized as such as the leader in managed service in rural. I think we're going to get there sooner than later.
Okay, so we're gonna get into some more questions, but okay, so you mentioned potentially other services. Again, the core value, I think, of NuRAN is it's the the expertise, the intellectual capital. So the towers is just one part of the story, because again, like a lot of great companies, they start off with one area, but then they expand, they build on that, and all of a sudden it's a completely transformed business.
Actually, yes.
I mean, like again, so what other services could you potentially add on to? You said that Orange has asked you to do more stuff. Like, what other things can you do?
First of all, for ourselves, we're implementing a network operating center, a NOC. That NOC is for monitoring and reporting on the network. Once you have this in place, you can serve a lot of other customers that don't have such service. First. Second thing, you will have team on the ground doing operational and maintenance on those sites. Doing it for other sites of other operator, you can do as well. It's the same team. So why don't you maximize the usage of those person? On top of this, you also have what's called what they call managed service for VSAT. We are, with our partners, implementing a teleport, a hub. And this teleport only today serves NuRAN. Why don't you expand and sell bandwidth to other clients, government, mining, other MNOs, and so forth? So you can expand on those revenue. But right now in the financial model, there's nothing as such. I've given the mandate to somebody internally to look at the different variants of revenue stream that we can bring from those operations, and it's an ongoing just going to the site themselves, Jack. We could put an internet cafe. We could also bring internet to schools and dealing with government to pay for this service. So there's so much that could be done. Once you get there, you're first, and being first, you can expand on a lot of different services that you can give to the community, but also to other potential customer in country.
Yeah, so this is very important. So being, having your foot in the door, not even in the door, you're already on the ground. Being there is a massive advantage, because first of all, how many other, I don't think people realize how difficult it is to do, business in these rural areas in the developing world. I mean, it's not easy. So it
is and it is not, Jack. Right. Okay, because people have a lot of fear. This is Africa. This is not safe. This is this and this and that. What is tough is to get to the site. Really, right. Once you get there, people are like, "Welcome, guys. What do you want to put your tower here? What can we do for you to make it happen?" So, it's really the toughest piece is all the logistic behind to bring this big infrastructure to a place where you have no roads or almost zero roads. And in the course of the transportation, you hit a recent flood and you can't cross the new creek that has been forged on the way there. So this is what is tough about that. And
but that adds value. You see, what I'm saying is this really adds value to.
We're creating an expertise, exactly,
because it's now you have this. There's a real moat there, because it's not like anybody can set up a tower in New Jersey or whatever it is. That's like everybody and their brother-in-law wants to do that. But when you're in this other area, you really have like a monopoly. You almost, it's not really a monopoly, but you have a very, very strong
It is a monopoly,
franchise.
actually.
It actually is a monopoly. It's a contract. Technically, it is. So, and again, this is going to be the biggest growth market. Africa is that's like the last frontier, last big growth opportunity. 20 years ago, China was the big, market opportunity, right? Now it's Africa is the last. There's no other place to go. Maybe Latin America a little bit, but this is the big thing. So let's get to some audience questions here.
Yes.
Okay, so Scott's asking, is there any information you can provide regarding the acceleration of towers going up? Have there been any recent delays?
So if you have looked at the press release we did on Monday, I on purpose put the slides that were presented to Orange during the steering committee that we did last week with Orange in Paris. You will see in the graphs, especially the one on the left-hand side, where it stands in terms of where each component of a site stand. Are they delivered in warehouse, in transit, or they're still stock at custom clearance? So I have put everything there just for you to have a clear path forward of where it stands. And in both countries, there's batches of equipment that goes there to build 120 sites each, okay, which are considered batch 1 for both countries. So accelerating the pace, this is not the problem, my friend. The problem is having all of those things cleared up. If you look at Cameroon itself, Cameroon, we've been able to deliver 30 sites in the last month. So it means that 120 sites could be done with an handful of team on the ground. We can build 120 sites within 4 months. So it's not that complicated. We can probably accelerate the pace by putting additional team. But the key factor that you also need to know, it's not a matter of not being fast enough, because building a tower takes 3 days. It's not 2 weeks. It takes 3 days to do it. But once you have the equipment in place, you load your thing at the warehouse, you go to a cluster and deploy a couple of sites, then you see site 1, 2, 3, 4, 5, POC, and then you have a delay. The teams are coming back to the warehousing, they're packing up again, and they're leaving, and then talk. In DRC, we have 3 subcontractors selected. Only one of them have received PO up to now, but of course, even if we are sending POs to the others, the stock has not been cleared yet, so it will be tough for us to go and do. By the way, the status, the email, the PR status is as of January 31st. I don't have the final status, but especially in Cameroon, the batteries got cleared, I think. So we will be running on a faster pace there. But seriously, we're it's not because of the tough condition or something like this. It's really to get those things cleared from custom and everything.
Okay.
Yes, Ben.
So that's the answer is yes.
They could. But if you do this, then it's a different setup. Your customer then become the regulator. In Canada, we have what's called Industry Canada that give the license of operating mobile network, right? And their clients or their license partner are Bell, Videotron, TELUS, Rogers, and whatever. Okay. If we want to do this, our technology is capable of, by the way, we could do that, but it's at the entry a riskier business. Why? Because you need to deal with the regulator. Right now, dealing straight with a mobile network operator, it means that you have a contract in place and you have a real path forward to bring back revenue. When you build and they will come, like the Kevin Costner movie, when you build and they will come, it's a different story. You need to build
speculation. That's a speculative model.
And you need to sign capacity lease with the operator. So it's a different story, but definitely our technology is there. And the DFIs are big on this thing as well. So we might do some of those contracts in the future, but I don't see it for the next year and a half minimum. I think that just the multiple tenant, like the Tower Co, will definitely occur maybe end of 2023, 2024 in smaller countries, I would say.
Francis, I have a question. So, a lot of companies like yours, they start off and they evolve, they transform, as revenues start coming in. Let's say, a couple months from now, or a year from now, the market cap of NuRAN is, let's call it, I don't know, 200 million. The stocks are doing well. You got revenues coming in. Are there any strategic acquisitions out there that you're looking at, or that would be, on the table?
I'm smiling. So would, could, should, might, shall. The answer is yes. Of course, being a publicly traded company, you're always looking after opportunities to grow faster and to give you the leverage that you need to go faster. So there are definitely something that we are thinking of as even at this time, but no processes has started yet.
Okay. No, because, I ask because, look, I think once, you have like a business model, you have a company that has something very unique, you have a management team that's able to execute, the company can evolve in really dramatic ways. And all of a sudden they can go from, a small tower operator to be, a massive telecom company. I mean, like, look, back in the, I'll give you, there've been many examples of this, but I'll give you a crazy example, which was, there was a company that started off in the, they owned parking garages and funeral homes, right? And that became Time Warner, the massive, media company. We own movie studios, and that became AOL, New York's massive, multi, I don't know, $100 billion market cap. So, but they did it through acquisitions, and they bought it was that's
everything is possible.
Yeah.
Vertical integration, like buying some of your suppliers to reach a lower costing. That could be vertical, horizontal integration. People that do exactly the same thing as we do, but we just acquire some. And then acquiring something that has a complementarity to what we're doing. So there's a lot we can do. By the way, this question about the Tower Co's, I like them.
Okay. So can you talk about partnerships with other? You have partnerships with other companies?
We had, and we're still in discussion with them. You have to know that these guys are giants, so they're slow movers. IHS is extremely active in Nigeria. I've got a couple of friends there. We're still in discussion. FYI, something you need to know. Not this RFP that we are currently bidding on with MTN, but the previous one, we were quoting on rural MTN RFP with IHS and American Tower. The two of them, we were the technology supplier behind. And because they did not know how to do rural, we were also providing in the mix tower, power, and everything that has to do with backhaul connectivity. And so that's probably what breaks them from going faster. They don't want to go to be in a licensing mode situation in the country. They want to stick to what they're good at, real estate. So they want to build infrastructure. So soon, I don't see them doing much on the rural network as a service type business. And one of the reasons being that most of the network operator wants to bring back the assets at some point, and these guys are saying absolutely not. But they could be a good big brother for us.
Okay. Question about okay, are you doing an uplisting in Europe?
Of course. So I was in Europe last week, and if there's something that we have seen, of course, COVID is blocking us at home. You don't see much, but out there, the understanding of the African fact and the what we're doing, telecom, building infrastructure, helping emerging markets, it's big in Europe. ESG, it's really, these guys are bang on to do those things. So Jim and I have said, look, we're starting the process. It will take what it takes, but definitely we would like to get to a listing in London or higher listing in Frankfurt. It's still not yet defined. For sure, we're going to have a stop in London because, and especially the IFIs that we've met as well, they don't like the IFIs is the big international fund with whom we're discussing with for the equity piece at the private level. But these guys could probably take a stake in the company as in a private company, but should the company be public in Europe? So it's a definite go for us. We will start the process soon, and we will keep everybody's updated of what's going on there.
Yeah, because I think in Europe, I mean, you know, France for sure is very close ties with Africa. I mean, historically, they understand the market opportunity in London also. Like they understand emerging markets, infrastructure. This is like, I think that would probably just, I mean, you know, that would probably double the value. I mean, just because much, you know, the European investors understand this business much more than US or Canada. I mean, it's like,
but US, when we start tapping into Latin America, Jack, it will be a different story. I will tell you.
Yeah, it's a little closer.
Close a deal with Carlos Slim's business, America Mobile, Claro in Brazil, and having a market cap around 200, 250, then why not NASDAQ? So I know NASDAQ is big. I was just looking at this alternative last year. D&O Insurance, to be on NASDAQ, it's above $3.5 million US.
You're kidding.
No, you know, I'm not kidding. So you need to generate massive revenue to be there. Okay, so that's why it's not as easy as what everybody think. Uplisting in Canada, possibly, but definitely a Europe stock exchange uplisting, that's ideal for us.
Yeah, that'd be huge. Also, a related question from Luca: is there an update on ESG rating?
Luca, good question. We are onboarding. I told you already. I told the investor world already that we're going that path. This is highly demanded by the DFIs that we've met last week. And as of such, we're in the hiring process with the consultant that we talked about. To get to an ISG rating, that's a different story. An ISG rating needs to be given by the body that lends you money. On this side, we will put all the framework together within the company to support environmental and social governance processes within NuRAN. Rating, we don't know yet how it works, but we will put everything together to reach that stage.
Yeah, I mean, I think you have, which is. So there's a couple of catalysts, I think, built into the stock, which is this ESG aspect, which could really increase. I mean, the European list, those are sort of like cosmetic things which can, double or triple the valuation. Because now, look, this is a perfect ESG stock because look, what you're doing is, this is not just some like, okay, climate thing, which is, theoretical. I know, okay, maybe there is climate change. There is, there's a debate, right? But when you're putting in, communications in these rural villages, you're literally changing people's lives. I mean, you're changing the quality of their life. They get jobs. They can earn an income. They get health care. You're extending their lives. I mean, all of a sudden, it completely, changes things for them. So that is, I think, a much more relevant thing for any of these ESG investors than, investing in some, climate change thing, which is, I don't know, so whatever, I don't know, wind power. This is the real thing, which there's an immediate impact on, millions of people's lives. So it's a huge thing. AZ, are there any plans to partner with satellite companies like Eutelsat?
So we're using Eutelsat because it was a signed deal already in Cameroon for the first 120 sites. Spacecom, the deals that we have with them is that everywhere they have a beam, they have the first right of refusal of the service, the bandwidth. Okay, so this is the deal we have with them. And Jack, this is part of the private placement we've done last summer. where $4 million as lead investor was brought by Amo Spacecom, the Israeli VSAT company. They came in as a partner, but also to reach an exclusive agreement with us. But it does not prevent us to work with a Eutelsat, for example, should we go in a country where Amo Spacecom doesn't have beam. Talking about Latin America, Spacecom is not in the picture. So we might cut a deal, and there's I'm going to MWC, the biggest telecom show, in 2 weeks, and we have a lot of meetings scheduled already with Eutelsat, Intelsat, Telesat, Viasat, everything sat. They want to talk to us because we are a vehicle of growth for these guys. So of course they will be interested. Francis, what can I do for you? Even the equipment side. So it's obvious that especially the one that will succeed, us, and we have another competitor that is doing good as well in this market, but there's a lot of room for the two of us, if not a third one or something like this. But bottom line, these guys want to onboard us ASAP, and they are willing to cut big checks to get that business from us. So yes, there are definitely discussion along those lines. Eutelsat, they're good partners, based in France, really close to Orange, so it would have been a natural version. But they, when we were negotiating to get some lead investor in the private placement, they have already invested in a low orbit satellite company called OneWeb, if I recall correctly, something like that. So their investment portfolio was full, but we don't neglect the fact that they could be part of the deal going forward in Latin America.
Okay, another question. Thinking of LightCell XG, does this new product allow us to target semi-rural or suburban areas? Okay.
Just because of the technology, but because it's a 10-watt output power, the reach is not that big. And if you go and put those products close to a 20-watt output power, Huawei or Ericsson base station, then their signal is stronger than yours. So yes, you could come back close to suburban areas and some semi-rural areas, but at the end of the day, we will go in sweet spot where we are not killed by the interference caused by other solution. But in those places, a 10-watt output power is sufficient. But David Parson is also working now with the team on a 20-watt version, and we do not neglect the fact to potentially use somebody else's technology, because we are a service provider now. So we have those products. If the product doesn't fill the customer needs, we'll acquire it from somewhere else. That's it, period. So we've changed our mindset now. We will continue to maintain our R&D to build new products. But bottom line, if we need something else to serve our client, we'll do.
Okay, so bottom line is, NuRAN, you have a clear path to, potentially a $20 stock price that's based on, and this is in the near term, next few years, just based on the existing contract that you have with Orange to get the 2,500 sites, which could generate, $5 million a month. That's, $60 million a year. We've talked about the multiples. That's, 10x plus revenues based on the comps, and that basically translates to $20 a share. You got news, right? In other words, you have the deployments starting to scale up. So we should start to see, I guess, more news flow as more of these sites start going up. We should kind of move closer to, that $20 stock price, hopefully.
Sky is the limit.
Last question. Okay, we'll ask last question, and then okay, so any plans to keep selling NuRAN's product outside of the network as a service model to other companies?
For the one that we have served until now, the answer is yes, we'll do, but not if these guys have the ability to compete what we do for the same countries.
Okay.
But yes, the one that we've started serving a while back, we will continue to do so. Why? Because the equipment in the core network, to change this and to switch to another vendor, it's complicated, and we understand that. So we've got partners like Infratel, Tonji Alabi in Nigeria that is currently deploying our OC2G in a couple of places. We've got, who else? GCES. It's mostly in Nigeria, though. So yes, we will continue to serve some, but we're no longer running after opportunities at this stage to sell our product.
Okay. Francis, what kind of news flow should investors expect to see from NuRAN in the next 30 days? What's in the pipeline?
I like the other CEO response. No, we can't. No, it's an ongoing flow. So we have a lot of new sites that will become live. Of course, we have the live site counter on our website that people can follow, but it's not everybody that goes there. So we will, of course, inform people from, let's say, a bi-weekly PRs on the status of the delivery of sites. But of course, we are getting close to probably resolution in some cases. We've been chasing RFPs with Orange, with MTN. We're also chasing other opportunity, and of course, some of them will come to fruition. So we can expect probably some of these news coming in. We are going to Mobile World Congress, as I said, from the 28th of February to the 3rd of March. So most of the time when you go to these shows, the big guns are there, and this is where decisions are being made. So fingers crossed that we can aim to get some announcement in the course of the show or just after the show, and so forth. So we will continue to maintain the connection with our shareholders and increasing value for the company. So we maintain pace there, and we will get this 10,000 sites achievement or milestone sooner than later.
Okay, excellent. Francis, I want to thank you, and we look forward to hearing more about the next big deployment, the network rollout in the coming weeks.
Thanks.
Thank you, and thank you everybody for joining our live stream. We will see you on the next one.
Bye.